learn from my mistakes. If you have a great asset, and I believe Bitcoin is a great asset, hold the asset. I'm actually looking at, if there is a 40% correction, I'm looking at, okay, well, how am I going to buy more Bitcoin during that correction? I'm not thinking about, oh, geez, I should have sold it 40% ago. I don't think like that. Don't expect good times forever. We're having a good run right now. I don't think you or I would think that there's not going to be a crypto crash coming. You have to know that will happen. I predict that Bitcoin will probably get to 500,000 over the next 5 or 6 years, but could we have a 40% correction between now and then? Certainly. So, you got to be ready. You got to be ready for this sort of stuff, basically.
Although we may believe that Wall Street is already familiar with Bitcoin, Anthony Scaramucci argues that this is a misconception that we have made up for ourselves. He cites data demonstrating that the vast majority of retirement funds, financial managers, and big institutions are still completely unaffected by Bitcoin. Zero, that's right. There is hardly any ownership, even among seasoned fund managers and executives. Even though Bitcoin is more than 15 years old, traditional finance still views it as a new asset. It is precisely this discrepancy between perception and reality that Scaramucci claims gives the bull case its potency. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Well, I mean, again, that's the bull case, right? So the bull case is there's $1 trillion on the way. It's going to push Bitcoin to $1 million a coin. I think you could go on ChatGPT or Grok and you could ask Grok, what is the coefficient ratio? Meaning, if $1 comes into Bitcoin, how does it affect Bitcoin's price? And so if $1 trillion comes into Bitcoin, because Bitcoin is fairly thinly traded, how much will it push up the price? It's not going to push it up $1 trillion. It could probably push it up closer to $2 or $3 trillion. So, that would imply valuations, close to $500,000 a coin. And, could that happen? I mean, I do believe that can happen, but I also think we're still in the nascent era of Bitcoin. People say, well, are you early? Yeah, we're early. 98% of the people that Morgan Stanley survey are at zero. And let me just repeat that. They're at a 0% allocation of Bitcoin. So you're a coiner, I'm a coiner. We have a tendency to talk to other coiners. And so we get the confirmed biases of the people that we're hanging out with. We assume everybody's long Bitcoin. I had the opportunity to make some remarks. I asked the question. I said, hey, my contemporaries, how many of you are long Bitcoin? These are people aged 58 to 65, Zach. How many of you guys are long Bitcoin? Okay, that would be no guys. Excuse me? Nobody in this room is long Bitcoin? Nobody. Then I asked a follow-up question. Well, how many of your kids are long Bitcoin? A few people raised their hand for that, but not many. And I remind people, we're in our own little soup. We're in our own little fishbowl staring at each other, and we think everybody's a coiner, but nobody's a coiner. Very, very few people. And so that's the bull case. Yeah. But I just know the vagaries of life, global financial crises. You've got the president now intervening with the Fed. You see dollar weakness related to that, interest rates backing up a little bit related to that. I don't know if the capital markets want that level of dependence in terms of the political system controlling something like the central bank. Could that impair things? I don't know. What I do know is that I've experienced 9 crashes in my career over the 37 years, Zach. 9 crashes. Every time a crash happens, somebody tells me, well, that's a 7th Sigma, 10,000 year flood and blah, blah, blah. Well, the 10,000 year flood happens every 5 years on Wall Street. So I don't want people to think that with any level of complacency about Bitcoin or any of their assets. I just think be a long-term investor, recognize there'll be volatility and recognize there'll be shortcomings. But if you're making the point that more assets are flowing and more capital is going to flow into this space, which may curb some of that volatility or may end the 4-year cycle of Bitcoin that we've experienced over the last 15, 16 years, I accept that, but I still want people to be cautious. 5 years from now, you and I, hopefully you'll invite me on your Coinage podcast and I'll say, wow, though, we didn't realize this in 2025, but the 4-year cycle is dead. Now, there are super bulls that'll come onto your podcast and say the 4-year cycle is dead and, we're going higher from here, higher highs every year. May happen. I'm not going to say that that's not going to happen. That's in the category of potential outcomes. You could say that Bitcoin has been in a 15-year bull market. some people would then push back and say, what are you talking about? We've had 60, 70, 80, 90% declines in Bitcoin. Yeah, but step back, Bitcoin has been in a 15-year bull market. If you bought your first Bitcoin 15 years ago, flew to Mars and came back, you're a happy camper, And so it just reminds people, I guess the big lesson, I don't know if the 4-year cycle is over or not. I'm skeptical about it only because I've learned on Wall Street, anything you think cannot happen, Zach, happens. Anything you think can't happen will happen. But here's the thing I would say, if you've got a great asset, and I believe Bitcoin is a great asset, and you want to learn from the mistakes that I've made in my career, well, let me tell you, mistakes that I've made in my career. I sold Apple. I sold Amazon. I sold Microsoft. I sold NVIDIA when it was a gaming company and I didn't really understand it and I let it go. And the mistakes I've made in my career is I've sold great assets too early. I went 3X on Apple. Oh, I'm a genius. I'm going to pat myself on the back. Let me get out of Apple and pay my taxes. Well, you know what? I left 15 more X's on the table. And so I just tell people I'm 61 years old, learn from my 37 years on Wall Street, learn from my mistakes. If you have a great asset, and I believe Bitcoin is a great asset, hold the asset. I'm actually looking at, if there is a 40% correction, I'm looking at, okay, well, how am I going to buy more Bitcoin during that correction? I'm not thinking about, oh, geez, I should have sold it 40% ago. I don't think like that.
2020, according to Scaramucci, was a turning point for Bitcoin. A large portion of the enormous stimulus that nations released in response to the COVID-19 pandemic went into Bitcoin. The thing to learn? Because of its durability, Bitcoin actually gets stronger under pressure. Macroeconomic unrest, new rules, and market crashes all serve to strengthen its long-term worth rather than diminish it. Scaramucci claims that Bitcoin is one of the most potent investment cases of all time, and that it is now almost hard to destroy it. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Don't expect good times forever. We're having a good run right now. I don't think you or I would think that there's not going to be a crypto crash coming. You have to know that that will happen. I predict that Bitcoin will probably get to 500,000 over the next 5 or 6 years, but could we have a 40% correction between now and then? Certainly. So, you got to be ready. You got to be ready for this sort of stuff, basically. I mean, listen, a couple of things happen. So let me take you a little bit further back. Bitcoin went from 20,000 to 3,000 or 4,000. It cratered in March of 2020. I think we were at 4,000, 5,000, 6,000, and then went back up to 20,000 by the end of the year in March of 2020. And I really believe that was a seminal year for Bitcoin because COVID helped Bitcoin. So what the hell do I mean by that? Well, a lot of stimulus money went into the market. A lot of that stimulus money ended up in Bitcoin. It sort of solidified Bitcoin. And as we came out of COVID and rates started to normalize, Bitcoin will, let me put it this way. It was becoming an anti-fragile position. It was becoming hard to kill Bitcoin. And so now, what are you going to do? Are you going to regulate it or not regulate it? And so we made the decision that the U.S. was going to eventually fairly regulate it. And the reason we made that decision was related to property rights. And just remind people, I guess it was 2019, maybe it was 2018, the IRS said that Bitcoin was intangible property. If you were going to put Bitcoin down on your tax return, you were going to treat it under the same tax code as intangible property. But once that word property was used, people that really understand the law here, I mean, I'm a recovering lawyer, went to law school, never practiced law, but I do understand property rights. In the United States, property rights are sacrosanct. They date back to the Magna Carta, King John in 1215. There's 900 years of legal precedent tied to our property rights. And so I knew that arbitrary and capricious behavior by the Elizabeth Warrens of the world or the Gary Genslers of the world were going to get screened and checked by the system. And lo and behold, that started happening. Grayscale won that lawsuit, and then the floodgate opened. So when you say the switch turned on, the system basically proved itself out. That's one of the greatest things about America is the predictability of the system. Despite the stress from political leaders or partisan politicians, generally the system from a legal perspective has been very predictable. So we got the outcomes that we expected. I think in President Trump's case, I think what you have to accept about President Trump objectively, he's got phenomenal political instincts. I think he looked around in 2024 and said, okay, wait a minute. There are pro-crypto voters. Are there any non-crypto voters? And the answer is no. I mean, Elizabeth Warren's putting out memes. She's building an anti-crypto army. Were there any anti-crypto voters in 2024? The answer was no. Trump understood that. But Trump understood that there were perhaps even single-issue voters related to Bitcoin. And so he switched. You know this. I know this. We can find his tweets going back into 2018, 2019, where he disliked Bitcoin, said a lot of negative things about it. But there he was in July of 2024 rendering a great speech about Bitcoin. You could tell that there were coiners, Zach, involved with the speech writing because it was a good speech about where Bitcoin is and where Bitcoin needs to go. And so I give the president a lot of credit for that.
Scaramucci remembers how in March 2020, Bitcoin dropped from $20,000 to about $4,000. By the end of the same year, however, it had recovered to $20,000. Since the COVID crisis really aided Bitcoin, he refers to 2020 as a seminal year. Trillions of dollars in stimulus were released by governments, and a large portion of that money ended up in Bitcoin, strengthening and solidifying the network. From that point on, Bitcoin developed what he refers to as anti-fragile, meaning that rather than crumbling under stress, it becomes more resilient to market meltdowns, legal restrictions, or volatility. He explains that centuries of U.S. legal precedent around property rights were activated when the IRS designated Bitcoin as intangible property. He thought that politicians like Elizabeth Warren or Gary Gensler couldn't just destroy Bitcoin, since property rights are fundamental and protected in America. Grayscale's victory in its case against the SEC validated that idea and paved the way for its wider use. Scaramucci also draws attention to President Trump's 2024 political shift. Trump acknowledged that there were many pro-crypto votes, even those who were single-issue voters, but that there were no anti-crypto voters, despite his prior criticism of Bitcoin. He made swift adjustments, delivered a forceful speech in favor of Bitcoin, and hired pro-Bitcoin individuals to important roles, including Paul Atkins. Scaramucci contends that since greater technology always prevails, this change would have occurred nonetheless. Blockchain will someday replace some aspects of traditional finance, much like the horseless carriage replaced the horse and buggy. Over the next 3 to 5 years, he anticipates significant fundamental changes to the financial sector. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.